Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, guys. Welcome back to the show. Taking a look at markets here today for what is actually a pretty important week. We've got a lot of key market data coming out, starting really on Wednesday. But we have Wednesday, Thursday, and Friday. We have some really big key economic numbers that we will be watching out for here on the stream. And I want to start out by saying good morning, good afternoon. Thank you very much for tuning in to the show, wherever you are in the world. Comment real quick as we get started. Where are you watching the stream from? Let us know in the chat so we can say hello to you. Couple things to look out for here. We have, again, Wednesday, Thursday, and Friday are very important days for market data, and we will be live streaming for all of them. Here's a couple things to look out for. On Wednesday, we have PMI numbers for several countries in Europe, key countries in Europe, but also at the same time, we have US PMI numbers. Now, what is PMI numbers and why do they matter? Well, it's basically the output of the manufacturing and services industries. And of course, strong economic output from the services group or the manufacturing group, that's going to be likely strong for the currency. And weak numbers are expected to be not so good for the currency. So this is a pretty straightforward reading, but again, out of the French and German ones, we're expecting some contraction. Remember that under 50 is a decline and over 50 is a advance in economic kind of output. So we'll be watching those numbers really quick. These numbers, by the way, really important to currencies, but also to gold, right? Strong economic output could strengthen the currency. And of course, if you get a stronger dollar, what does that mean for gold? It means not so good. So watch these numbers. They'll be really important. Thursday, we get Europe's decision on interest rates, likely to just hold. And we also, of course, get GDP numbers, advanced GDP. These are probably the most important GDP figures that we get. The advanced GDP is the forecast quarter over quarter. And we also have claims data, right? Jobs numbers still very, very important to the strength or weakness of the US dollar. And finally, on Friday, we have core PCE, possibly the biggest one of the week, watching to see what prices are looking like for the consumer, right? Personal expenditure is very, very important. And we'll watch all of these numbers here together. These are very, very important stuff, especially if you're watching like the US dollar, if you're watching gold indices, all of these things set to move off of these events. Speaking of US dollar, let's take a look and see where we currently sit. This weekend on my Sunday video, I pointed out that on the daily chart, we have a downward trend here that seemingly has broken to the upside. Off of the daily chart, if we do get a pullback into this area, short term, I am bullish. I think that 102.5 could be an area where buyers hold strength here. And you may ask why? Why fundamentally? Well, recently there's been a trend of stronger than expected data out of the United States. And why that matters is that strong economic data, guys, could mean that rate cuts are not coming as soon. And people have gotten really excited about rate cuts. But if you get rate cut disappointment, it's likely to cause the dollar to continue to strengthen in the short term as people reevaluate, well, if rate cuts are not coming because the US economy is just so strong, that's potentially strong for the US dollar. So we'll watch the dollar close this week. Again, a big breakout here at key resistance and watching for that pullback. That could be an interesting opportunity to sort of join several trades, in my personal opinion, both on the currency trading side as well as like gold, etc. Speaking of gold, let's take a quick look and see what gold is doing here this morning. Daily chart here to start out. We've been really range bound, but we tried last week to find a new low. We did in fact find it very short term, but sellers were not able to hold those gains and price rallied back. Here's the thing: you take a look at the 4-hour chart; it's still very weak, I would say. Right? Potentially, we're putting in another high here, which could roll over. But for me, it's really about, can we actually take out those lows in order to give us that next confirmation? This would likely be accompanied by stronger USD movements, right? The key to trading gold is to watch the dollar, at least in my view. So we're watching the dollar close. We're watching gold for that possible break of structure here. If we do get it, it could be an interesting signal. I believe the Edge Finder has us at a bearish read. Let me double check that. I'm going to take out the neutrals here on the Edge Finder for a moment. Nope, not quite. We were at, hold on, let me put the neutrals back in. Are we at a -4? What are we at for gold? It was a -5. Okay, so we're back to -3. What is going on with this? Let's see. We have retail sentiment mixed. COT data was actually slightly positive. Interesting. So gold is not quite on the radar, but something to watch. I am still bullish oil. I have a position open on gold. I'm sorry, on oil. Let me see if I can show you guys that really quick. We'll go back to the chart here, and I'll switch over to oil. I am long US oil, WTI. This is going well. We got a good trade here. And let's see, we've got $400 in trading in profits right now on oil. So that's a nice start. Stops are below these lows. I narrowly missed getting stopped out, but I'm glad to see that we got this rejection. And I will say, I don't want to jinx my own trade, but usually these are the types of trades that work well for me, is when I initially have a trade that, my entry, I've said this many times, I think that people get overhyped about how important entries are. I stop out all the time. But it doesn't really make a difference because, well, it does make a difference. Obviously, stop losses and strings of stop losses are painful for any trader, myself included. However, it's less about the entry and more about the exit, because now, we've got this entry here and price is reversing off these lows. It's about managing this trade, because I feel like a lot of traders, myself included in the past, would struggle to hold on to these gains. Like I would be tempted to close this trade out. And had I done that on my S&P trade back in, late October, early November, I'd probably still be in drawdown from that period. That one single trade that I held and let it really run for its potential. I held it for a month and a half and still didn't reach its full potential. I got trailed out before it continued to spike higher here recently. We'll watch that close. But again, the S&P is a little bit of a sore subject for me. It continues to march higher without me, but we take it one day at a time. So I am in this oil trade. We'll see if we can hold on to this and go from there. But looks like we may be able to retest these highs. And if that happens, the question then will be, can you actually break through those highs? Can we get that next expansion higher? I will say, if oil does continue to march higher here, if we are able to break out of some of this daily chart resistance around 75.5, let's call it, on US oil, that's not UK oil, not Brent crude. So I know the price tags can be a little confusing. If you look at UK oil, it's trading at a different level, right? So UK oil 79, US oil. So I think that if we can get that breakout of key resistance here, we could see oil run for a little bit. And I've been in that camp. I made a video all about it last week. Frank and I talked about it at length, and we'll see if that can continue to play out. But so far, trade's looking good. We'll try and hold that one. Try and stay patient on it. Floating 560 on that trade. We'll watch it close. And again, getting that bullish reading off the Edge Finder every day, straightforward. If you want to know my, like the day trader vlog kind of style videos, every day when I'm looking for trades, this is what I do. I uncheck neutral. I look at this list and I say, is there anything that I fundamentally and technically like? And then I'll go through and I'll check these charts for trade setups. And the amount of simplification that adds to your trading day when you just have a list of charts to check and that's generated for you every day, with some level of fundamental confirmations in there, right? Economic stats, for example, the US data, I mentioned it being really strong for like PMIs and retail sales numbers. That's baked into this economic output. So that automatically is generated for me. And it's part of the reason why short term, I think the dollar has more strength to it. So again, retail sales and PMI numbers, giving some strength to the US dollar. Now, of course, we'll see how that plays out with PMI numbers coming out on Wednesday, but we'll watch those numbers close. So something to point out. Real quick, guys, we're going to take a break and we're going to come back with Frank and just see what he's up to, see what he's looking at here today in the markets. And I'm curious to see if he has a similar trade still on oil, but we'll talk to him in just a moment about trades on the day. So be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, we're back with Frank. Hey, Frank, how's it going, man?
Hey, how's it going? Doing well.
Pretty good. Frank, did you hear a little bit of what I was saying about oil? And are you still in a trade?
Yeah, so I am still long from last week. I got in on the 18th, I believe. So I guess we're in this together now.
Nice.
Same analysis, kind of on a technical scale, though. Looking for a breakout on the daily, which didn't happen on Friday. Kind of looked like some rejection and that maybe it was going to turn lower. But today, kind of back to where I'm feeling more comfortable with holding.
Yeah.
So I'm in UCO, by the way. I'm using US oil on MetaTrader to track it, but I'm in UCO is just something I can trade on WeBull, which tracks oil prices. It's like it behaves the same way.
Yep. Cool. Yeah, I think if that oil trade continues to play out, I do wonder, if oil prices really stay strong for some time, I wonder if that throws a little bit of takes a little bit of the fun out of the NASDAQ and S&P party that we've been seeing. Because, Frank, I saw something interesting this morning. I was filming a video for my topic of the day. I'm talking about gold and what's going on. But there was something interesting. Remember last week when we said that it was like 60-40 that people thought that they were going to cut rates, that they thought 60% of the chance they were going to cut rates in March. Well, I looked at it this morning, and after the last few days and round of economic data that's come out stronger than expected, this actually flipped. And now we see it's a 40% chance of a cut in March. And what makes me so interested in that topic, Frank, is that it's 40% cut in March, but the NASDAQ and S&P haven't pulled back at all. So what do you think about that?
I think it will. I think the NASDAQ, I think all the indices will pull back. And I've been thinking that we're at some limited upside here, just because we're going to have, higher rates for longer. And, we can't tell exactly what will happen, but the fact that the market is now sort of leaning that way, I didn't know that until you just said, but I think it's starting to switch sentiment where, the hikes don't really make sense, or the cuts don't really make sense right now, just because of the last CPI number and that we're still not close to our inflationary number. So I don't think the NASDAQ or the S&P are necessarily going to fall substantially, but I do think it's going to be kind of the same, just sort of mode it's been in for a while for the past, I guess, 2 months, where just trending higher, but you got to pick your entries and just
Yeah,
wait for things to get back into like a trade setup. Like, I don't think buying now would be a tremendous idea, but maybe
I
wait
agree.
for support or something like that. Just wait for it to give back some before you enter.
Yeah. And Frank, I pulled it up just so that we can look at it together, but I was close, but not quite 60%. So it seems like right now that for the March meeting, which is March 20th, there is a 56.5% chance that we will remain unchanged in the interest rate, Fed funds rate. And this number creeped down to 42.4% that we'll see a cut in March. And to your point, Frank, I want to say something too about this. I'm not by any means bearish on the indices. However, this is actually making me happier to see in terms of if we do get a pullback, I'm very bullish because I think that rate cuts are not necessarily what the market thinks they are. I think that the market like loves the idea of like, oh, let's get cuts going on. And I'm like, no, you actually want to see hot economic data. You want to see strong data. Good news is good news, I think, this year. Whereas, people want to see, I want the economy to struggle. And it's like, be careful what you wish for. Because do you really think that the market's going to be all rosy and peaches if you get 7 rate cuts in a year? That's like aggressive cutting, similar to how we had struggles with inflation. And that's why we aggressively raised rates. I don't think you want a ton of rate cuts. I think you want to see economic data look relatively strong. You want it to hold in there. And you don't want them to rush rate cuts because good companies will still be able to produce earnings even if rates stay at where they're at. The only thing we don't really want to see is we don't want to see rate hikes. Rate hikes would be terrible, right? You don't want to see inflation become a problem again. You want to see decent economic data with inflation staying relatively cooling overall. And then you get your sweet spot. So, and I think that might be a little bit why the market hasn't pulled back is people are feeling the same way. They're saying, rate cuts are not as bullish as people are thinking. That sure, you'll still get them this year, but really the key story is we're just not going to rate hike anymore. And that's the bullish catalyst
Yeah.
think. So that's my thought.
Yeah, I agree with you. I think rate hikes are off the table, at least for now. But just the anticipation of cutting anytime soon, it doesn't really seem realistic.
Sure.
So just cautiously bullish, I guess, is where I would sit at.
Yep, fair enough. Yeah, I think that's worth feeling that way. I mean, at this point, I don't see myself buying indices. I'd like to see if I can get a wait for a pullback scenario. And in the meantime, there's other trades to be had. I mean, we got this oil trade going pretty well so far. So we'll see if that ticks higher. And again, I think that if that does become, if it keeps going higher, what that could suggest is that maybe future inflation rates could start to get high. If you get a couple percentage points higher on oil, suddenly that will be felt in future inflation readings. So we'll watch that going forward and should be interesting. Frank, thanks for coming on the show, giving your 2 cents on what's going on today, and congrats on the oil trade.
Yep, thank you. You too.
See you, Frank. All right, guys. Yeah, so we are watching oil. We're watching indices here today. We're watching the dollar index, which is still flat despite, again, the slight less likeliness for rate cuts in March. But to help me next on this subject, we do have Ivan. He's going to be joining the show here to take a look at the markets. And just before we get into that, I do want to mention, I mentioned this earlier, but if you guys want a copy of the Edge Finder, we've got a sale going on. If you send us a direct message on our website right now, you can get 15% off by shooting us a DM. We got the link here in the chat for you. Just click this link, speak with someone on our team, and we'll get you hooked up with a copy for a nice subscriber discount. Thank you guys for supporting the show. And that link should be there in the chat. I think my chat is bugged today. There it is. Yeah, thanks. The chat is being weird on StreamYard today for some reason, guys. I'm not sure what's going on. But with that said, we're going to bring in Ivan and say hello to him. Hey, Ivan, how's it going, man?
I'm doing all right, and you?
Pretty good. It's been a little bit since we've spoken, and I don't know if you caught. Were you watching the stream? My chat is bugged this morning, so I couldn't see if you were in there or not.
No, I was not there. Literally just arrived.
Okay, no worries. Frank and I were talking a little bit about the March meeting, which is a really, really interesting upcoming meeting. It's the next kind of live meeting for the Fed, and odds switched from 60-40 chances, 60% that they would cut, to now 40% that they would cut. So I'm wondering what your thought is right now about the U.S. dollar and about what the Fed is likely to do next. What do you think?
It scares me a lot, so I don't know. But I bought the euro this morning, so
Okay. Okay, so you're looking for rate cuts then in that case.
No, yeah, okay. So what I'm playing is well, with the higher than expected CPI, the rates changes. Expectation to rate cut is of course off the table, and there is still more dollar bullishness to come. It's just that last week was dollar bullish, and then the other week normally becomes dollar bearish, and then we become dollar bullish. I just want euro dollar to go back up to 110, 111, and then drop. So I'm just tactically buying euro dollar, Australian dollar, US dollar higher, and then I will short, it again.
Okay, got it. Okay, very interesting. Yeah, so kind of a short-term move there on the euro. Do you have any on the euro side of the trade? Do you have any interest there? Like you do have PMI numbers out of Europe, and I think on Thursday we have the rate decision for Europe as well, the ECB. Is there any on that side, or is it mostly just dollar trade related?
Oh, this is dollar trade 100%. Secondly, it's a seasonality move. Third week of January normally see dollar weakness, and fourthly, we have seen higher than expected CPI coming out of UK, lower than expected on so higher than expected on dollar, but also pound. So the interest rates are. Sorry, the inflation is not where it's supposed to be. It's not in the way it's supposed to be. So I in my opinion, we're going to have a rebound this week. And then if I'm not wrong, it's just 100 pips or something.
Okay, fair enough. Yeah, I think it's interesting just to keep a close eye on that upcoming meeting. It is will also be interesting this week. We do get our PCE numbers on Friday, which we point to as kind of the Fed's preferred measurement of inflation. And if that does come out, hotter than expected or cooler than expected, both scenarios create kind of a good, forecast for that Fed meeting. So I think the PCE number will be really, really key this week in helping us to kind of gauge that. It's interesting to see the indices just continue to rip higher here. And I've been saying, Ivan, that my FOMO is hurting right now because I am not in this move anymore. So it's painful to watch it keep going without me, but trying to stay disciplined. I am in the Russell, so that's nice because that one's up a good bit today, but still kind of lagging the others. But what do you think about indices right now? Are you in any trades, or are you looking at them, or are you bullish, bearish? What do you think?
Like from a trading account perspective, I don't have anything on. But you caught way more than I did on S&P, so I don't know what you're crying about. But
you're right,
I have more reasons to cry. But yeah, I was thinking about buying it until I saw it on Friday, and I was like, maybe I'll buy a higher high. So to me, again, I just hope and pray at some time in January, February, March that we have a pullback, and then I can buy it then at a better price. But right now, the FOMO is
Yep, same here. It's been so strong. You've had just a massive push higher, and it does make me a little bit nervous. The idea here, you might be asking, well, why not just buy it if it's just going to keep going up and up? And again, the problem with thinking that way is that right now, the bear case is so weak. Like there's no bear case. And the problem is the second that a bear case creeps in, what I mean by bear case is an argument for the bears. There's like very little, like it's really hard to come up with one. When that bear case creeps back in and you get a rebalancing, it becomes a market again, meaning it doesn't go in straight directions. The sell-off will be aggressive. right? And it very well could come back to this 4,800 pretty quick. It also could just leave us in the dust. And of course, if that happens, we'll just reevaluate. But I am still interested if we can get that pullback to 4,800. I'll watch the S&P close, but it doesn't seem like that's on the cards right now. What do you think about gold, Ivan? Is gold confusing you as much as it is me? I feel like it's just so choppy.
To be honest with you, just one more thought about S&P or NASDAQ for that matter. FOMC meeting comes in. And if they are not going to cut as much as they are expecting, so there's what the market is pricing in, and then there is the actual, they will actual say that they're not going to do what the market thought it's going to do. There's also going to be like a correction. So I would say that generally speaking, what generally tends to happen is that market most times has gone up before FOMC and then fallen down. That's been like at least a play recently. On the gold, I want this to go higher. It did come back, tap down to like a level I made like a long time ago. But other than that, it's a range. It's a range for me, so it's not conclusive of what I want to say.
Yeah, and there's a key differentiator here that I think is interesting to point out about gold and about the indices. For people who are wondering, Nick, Ivan, why are the indices just rocketing on this idea while gold is falling behind? And I would point to two main things. Gold doesn't yield anything. It doesn't produce profits like companies do. So company earnings look pretty strong. At least we're getting a lot more earnings this week, which will be interesting. But company earnings have been strong. The consumer's been strong. So the economy's been strong. That really helps the stock indices perform really well. Meanwhile, gold doesn't yield anything. It is totally dependent on whether or not currency strength is there or it's not. And if the dollar does not, absolutely fall on the idea of rate cuts coming right away, gold doesn't really have a huge bullish catalyst that stocks can, because they produce earnings. So I think what's interesting about gold is that you're seeing it not at the highs like stocks and indices, because it's the rate cut kind of conversation is still up in the air, and there's a good argument for both ways. So this is kind of your bull bear case is existent for both sides on gold. And not to go too far in a tangent, but you can look at other areas of the U.S. stock market. Let's go like industrials, for example. Industrials. I'm sorry, not industrials. That's not what I meant. The utilities. Utilities are not near the highs at all. These are companies that are more interest rate sensitive than the NASDAQ tech companies, which are not. So the point I'm trying to get at is that interest rates weigh heavily on certain things more than others. And gold is certainly very, very prone to whether or not interest rates can come down. Does that make sense, Ivan? Is there anything I missed there?
In a car world, it's kind of like when you're expecting profits from gold, it's like expecting a Honda Civic to be a Bugatti Veyron. It's kind of just, it's kind of like
that's good
the
way
wrong
to put it.
thing. So yeah, there is no returns. There's only the change in the dollar amount or the price amount. And to Metalizer, where I said range, I mean the price is still the same as of since 28th of November. So to me, that's pretty much of a range. But yeah, so there's no profits. There is no interest rate. There's nothing that yields. It's only for preservation. That's true. So to me, unless we get something like October again, or maybe something like that was end of November again, that would be great. But then we have to break 2040 for me, and then we can start talking about it again. So I'm waiting for a bullish catalyst, and a bullish catalyst can also be a dollar bearish. So hoping and pray for the FOMC meeting. But I saw that you turned bullish again on dollar. What's that
Short
about?
term. Yeah. So here's the thing: is the reason is because, and I can make a good case for it, I think. So And here I'll give you my elevator pitch on short-term
right.
dollar bullishness for me. So the dollar index, clean downtrend and simple price action change of structure. That is the easiest component of my argument, is that we had a little bit of a breakout. But the interesting stuff is that you look at why this breakout is really occurring, and it's because as we turned the year, everybody was like, the economy is slowing but not dying. We're going to get our rate cuts. It's going to be great. The challenge, however, is that at the turn of the year, basically everything that's come out, most of what has come out in terms of the US economy reads, for example, PMI numbers, retail sales numbers, hotter than expected CPI, all of them keep pointing to dollar bullishness. You know, a strong consumer seems to still be in case. We had consumer sentiment that was hotter than expected. So my short-term bullish catalyst for the dollar is based on the idea that basically our algorithm has pointed out that economic stats are pretty strong for the dollar right now in comparing to other places. You saw UK have terrible retail sales. The point is you've gotten a string of strong economic data for the US, and I think that it's a crowded trade. I mean, look at the stock market. If you want to talk about what people are expecting, people are super, super optimistic. So I think there's a bit of a crowded trade, and I think that the dollar is not necessarily just going to roll over to nothing this year on what is relatively strong economic data out of the US still. Until you start to see that meaningfully come back, I'm going to stay neutral to slightly bullish. I'm not thinking that it's going rocketing back to the highs. However, I think that rate cuts are going to be a little harder than people are thinking they're going to be. So we'll see. That's my bull case. We'll see if I'm right.
I don't know if this is a bet though. But do you think that gold price will be higher 31st of December 2024 or lower than the current price?
I think it'll be higher. My thought process with that would be I'm still bullish overall for gold because I do think we're going to get our rate cuts. The thing is, we might just not be we might not see as many rate cuts as people were thinking. As we turned the year, it was like people were thinking 7. And the Fed said 3, people thought 7. Now we've kind of come to the middle of like 5. So I do think you get rate cuts, which is your bullish catalyst for gold. However, it's just maybe not as many and it's not as fast as you think. Now, I will actually say, Ivan, if you want to see gold scream through the highs, get your 7 rate cuts, because that 7 rate cuts probably drags the stock market down too, because that's an environment where, okay, now we're going to go into recession. If you get 7 rate cuts, it's like, be careful what you wish for on the stock market side, because that likely means recession, which is bullish for gold as people get fearful. But that's what I'm thinking. I think it's an interesting, if you really are a bull on the stock market, you probably want 5 rate cuts or less, right? You don't want a ton. You want a healthy level. So economy is meaningfully slowing, but we're not crashing in the economy side. That's my take.
Okay, sounds interesting. Well, will the market go into will market go back into risk off and saying, "Hey, we are about to die," if we have 7 rate cuts? I think it's all relative because we have also, how many rate hikes have we had though? We have gone from 0 to 5 something, 5.25.
Yep.
So that is my brain can brain it even. It is it 20 rate hikes or something? 21?
I'm sorry, I lost you on the 20 rate cut part.
Rate hike. It
Rate
is
hike.
5.25 as far as I know their interest rate right now.
Yep.
I might be wrong. If that is the truth, and we went from 0 to 5.25, and 1 rate hike is 25, and I think that should be around 21 rate hikes. So if we cut 7, relatively speaking, it's just around 30%. So I feel like that's more of a stabilization more than, oh my lord, we are about to die.
Yeah, and I think that there's a couple things you could slice up with this. Like here's what I would point to as like this has a 100% track record of calling recessionary periods, is the US yield curve. And so basically, keeping it really simple, when you see this thing become very inverted, it usually triggers a recession when it becomes uninverted. So what we see here right now is we are very, very inverted. We saw the biggest bond market crash in US history. And so if we do kind of see this thing roaring back the other direction, yields would be falling tremendously on the longer end. And that would suggest that the US economy is really in trouble. And if the US economy is really in trouble, that's where you probably would see rapid attempts. So it's less about the number of rate cuts. It's more like, why are they rate cutting that fast? It's because maybe they're a little concerned about something. Whereas if they very slowly ratchet rate cuts into the picture, it's probably because the economy itself is not collapsing. So I think it's an interesting scenario to watch out for. Too many rate cuts this year is actually probably bearish, whereas a couple means, hey, the economy is still strong and companies can still thrive. So that's kind of where I'm thinking. You look at history and it's a warning sign when you get a lot of rate hikes and then we start to ease. Historically speaking, the Fed does not have a good track record of easing without having any sort of bumps in the road. So it's why I'm cautious this year. I'm not necessarily bearish. I'm thinking that we probably won't get as many rate cuts as people think unless we see a serious slowdown in the economy.
Okay.
We're getting complicated here today.
Yeah, it's if you haven't woken up yet,
there's your trading coffee for the day. But yeah, thanks for the good questions along the way, Ivan. I appreciate that. And I think it's going to be an interesting year from the interest rate. Last year, Ivan, we were talking 2022 and 2023. We were talking all about how far are they going to rate hike. And now the question is, how far are they going to rate cut and how fast? Because it'll be an interesting year from that perspective. Any other charts or things that you're looking at, Ivan? Is there any setups that you have or trades on that you're interested in?
FOMO. Do you know what the yield was last year on S&P?
Like 20-something%.
Yeah, I think it was. I think yield to date is around 20. Yeah. Did you have 20% return on S&P?
Last year I had a really good year. Last year was up like 45% because I traded a lot in NASDAQ. So it ended up being good.
Because I didn't. So I need to. It's 2098. So I need to work on that. So it starts today, I guess, by looking for a pullback. But so that's kind of where I am. I'm on dollar, bought euro dollar, bought Aussie. I'm looking for S&P. I needed to come back to 48 maybe, but yeah, maybe my grandchildren will get the benefits of this trade. But
Yeah, no, I had a good year last year. 2022 was pretty terrible though. 2022, I underperformed the stock market. I think I was down like 25% or something in that range. It was a much tougher year for me in 2022. So you give some, you get some, but it'll be interesting to see. I'm kind of with you on the indices. I want to be back in them, but I cannot justify what I feel is chasing this move at these levels. Again, we are breaking all-time highs, which is historically a bullish signal usually. So we'll have to watch it. But I do think that there will be pullbacks this year. I think there will be, it's not going to be as smooth sailing as people are thinking. And that will be great for people like you and I who can trade in and out of these moves. So we'll watch it close.
Yeah, as long as we don't get too hot on the what do you call it? Too hot on the cake, too hot on the pot, too hot.
As long as we don't get burned.
Yeah, don't get burned. Jesus help me. Yeah. So while I was trying to find the price action for 2016, which is the last election year that was normal. The other one was 2020. So looking for any pullbacks now. Another thing that I expect this year is I expect a range or not really much of a trend in the stock market around August to November. So it's all about now starting to look into the polls of who is leading, who is going to be the election, who is going to be the nominees. that actually is going to have an impact on dollar and S&P and Nasdaq and stock market increasingly for every month going by. So yeah, who knows?
Yep,
We'll get,
that's a
but
really
that
good
is
point, Ivan. Watching the election stuff will be really key. And, as much as I really do not care to speak politics, and I'm really not a hugely political person, my obsession with markets trumps everything politics. So I will be watching really close to see who is leading and what that implication could have for markets. I mean, it does look like, so as far as I know, the update is that Ron DeSantis dropped out of the election race, and he what is the word? He recommended, he vouched for Trump, basically. So it does look like it's going to be Donald Trump as the Republican nominee, and I imagine it's probably going to be Joe Biden that he's going up against unless something changes. I know there's been some rumors out there that perhaps he is not going to run again, but who knows? We'll have to see. But to your point about election years, yes, it is usually a volatile, choppy first half of the year, and historically a bit of a run in the second half. So we'll watch out as we get closer into later months in the year. And what were you going to say, Ivan?
It's just that it comes down to what we'll do with taxes. What will they do with relief, or if they want to do tax relief, or adding money into the economy? That was the last election. So and also it comes down to the political risk, as in, are they going to change policy quickly, or are they a stable person? That's going to be the factor. Actually, it's not going to be like, oh, is it Republican or Democratic? It's going to be what is the economic policy of that person. So whoever that is.
Very, very important stuff. So we'll have to definitely come back and talk more about that sort of topic in the most unbiased as possible way. It is a hot topic on social media. So Ivan, thank you for coming on the show. I do want to say, for those of you guys who have not interacted with Ivan before, he does offer one-on-one coaching. He also does our coaching webinars, our group sessions inside of the A1 Trading VIP Discord. So if you're not already in there, definitely check it out. And if you are already in there, make sure you're tuning in to those coaching webinars. There's a ton of value, and you can ask your questions to Ivan directly in there. So Ivan, thank you very much for coming on the show. We've dropped your link to your channel here in the chat for anybody who would like to check that out. And we will see you back on the next show. See you later.
See you later.
See ya. All right, guys. Always good to have Ivan on the show. Of course, again, very fundamental and technical trader like myself, and I appreciate that we have him on a regular basis. And again, like I mentioned, a ton of value in his coaching webinars within the group. Last thing I will say is, I mentioned this earlier, but if you guys want a copy of the Edge Finder, if you want to use the data that we use here on stream and in my videos to help take on the markets, get it for cheap. It's currently discounted. You can shoot us a direct message using this link that we're dropping in the chat. If you click this link, it'll connect you with someone on our team, and we're offering a couple cool things today. You get 15% off. And we're offering payment plans. If you'd like to work out a payment plan, we can make it possible for you to get a copy in installments if it's too expensive for you in one single day. Check this out. Again, click that link. We'll pop it in the chat there for you, and you can speak directly to someone on our staff. There it is. Click this link, and you're good to go. Thank you guys very much for tuning in to today's show. Have a great rest of your trading day. Trade safe, and we will see you back tomorrow. See you guys.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.